Hi and welcome back to Cheeky Crypto. My name is Nick, and today guys we're going to be jumping down into the charts for Bitcoin to see what's been going on most recently and kind of what I expect to happen next. As I get into this video, if you find it useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, why not go ahead and subscribe, tap the bell, select all notifications, and in doing so you will be kept up to date with everything that we do here at Cheeky Crypto. If you haven't yet joined us in Discord, links in the description down below. Fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there. Now, if you're looking for a little bit more from the crypto space, whether that is bear market strategies, project reviews, or trading, why not go ahead and check out the Patreon services in the description down below as well. Okay, let's get into this, right? This is Bitcoin paired up with USDT, but we're actually on the daily chart, right? And we're here because I want to kind of just talk about what I think could be a possible run going up, I guess, for the price of Bitcoin in the next kind of few months or so. And obviously this is bearish times. This is definitely a time to kind of be thinking about accumulation, and I'll go through some of that as well in a moment. But for the most part, this is kind of what I'm seeing inside the structures here. Okay, so this daily chart has shown us many different things. We've obviously had the high up here at about $65,000, the high at $69,000, the crashes down to the $28,000 low, the $32,000 low, kind of where we're hoping for a double bottom, but we won't be holding out too much for that, but we'll have to see how that plays out. But for the most part, everything is looking pretty interesting. We could also double bottom down here at 28k as well. But one of the things that I really want to kind of talk about is, why I think $69,000 is not the high for BTC. It's the current all-time high, in the same way that this was also the all-time high when it was at $41,000. Okay, we obviously went up to 45 afterwards. Now, the corrections here are very, very complex. I do think this is some kind of either overextended fifth wave, and I'll go through that theory in a moment, or some kind of corrective pattern here that is either an expanding flat or it is a running flat correction. Okay, so let's start off with taking a look at what I've been talking about most recently, or for the while actually, and that is that this is some kind of expanding flat. Down here we then got the reversal and moved up, right? It is also possible that this is an expanding flat taking us down ever so slightly lower, maybe around that kind of $26,000 range, and just finishing that off, and we end up with that expanding flat correction, also known as a megaphone pattern, depending on how you kind of look at the space. Now, that's obviously something I've been talking about for a while. Nothing has really changed there. That's kind of how I look at it. However, there are some more bullish kind of scenarios, and I'll kind of go through what these might look like. Now, obviously, we cannot deny that we're in a bearish phase, but this is all by design of where we are heading next. Okay, and I kind of went through a lot of things yesterday in the video that I did yesterday afternoon around Bitcoin's retracements, bear market retracements, the kind of typical things you would expect to see under bear markets, and what you do not tend to see when you kind of have these kind of things. Now, it's also possible that, depending on how you want to articulate all of this, and that we have a kind of a big pole coming up here, this is our bear flag or whatever. But I think essentially actually that isn't so much the case, and I like to kind of stick to what I know, which is the Elliott Way Theory. So let's get into this, right? So for the most part, what I'm looking at here is some kind of complex correction. So we're going to start with that. Let me zoom in on this. Okay, this is important to understand this, because this is basically setting us up, right, for what is next. So I take a look at this as a 3-3-5 structure coming down towards 28k. Okay, so what we've got here is not an impulsive structure. It's ABC coming down. We have the ABC coming up, and then we end up with a 5-wave drop here. Now, this one is actually really sharp. We move up for a bounce, and there's a little bit of a kind of wedge pattern just happening in here as we kind of trade sideways, and we drop to the $28,000 low. Okay, and then that basically marks that out. Now, that is a 3-3-5 corrective pattern. Okay, and that basically could be the end of our wave 4. Okay, that could be our wave 4 low just over here, and that's one way of looking at it, and I think in time this will be how we end up looking at it longer term. But then obviously what happens afterwards, let me just actually tidy up these so we get those off the chart. So we know it's a 3-3-5 there, and basically what we're doing is we're going to take a look at this. Let me just move the percentages out of the way. So here we can see that low point. We obviously have this retracement. Now this retracement is very, very deep, right? We have this surge going up. We have this retracement coming right in here. And then we move on up quite powerfully. We move up, right? We have this high point. We then move down, and then we have another peak just at the top here. Now, again, there's lots of different ways of looking at this. And essentially, I do think that we have here a more impulsive structure to it, okay, with a slight overextension at the very end. So here, what I think is actually going on is we have a 1, 2, 3, 4, and 5 move. And in this fifth wave, we have the overextension by going 1, 2, 3, 4, and 5. Okay, so we've got to divide that into sub 5 count. Now, this is different to what we have over here because we don't have a definitive kind of ABC structures or anything like that. We have clear and kind of impulsive structures. So vastly different, but again, it's a good starting point to kind of just bear that in mind. Now, what about this retracement coming down? Well, this retracement coming down is also very, very key. So really what we're going to do here is we're going to take this high point. We're going to take, actually, no, we're going to take it from the bottom. We'll take it from the low and we'll run it up to the high just here. Okay, when we talk about those wave 2s, those wave 2 retracements are incredibly deep. And if we go ahead and just draw on here, where would this typical wave 2 retracement be? It falls right inside this spot right here. So essentially what we're looking at here is actually a sweet spot for a wave 2 retracement. Again, nothing about this is standard either, and it is possible that we come down ever so slightly lower out of this. Now again, the whole thing is very corrective. Here we have a big drop. We bounce up, we drop back down again, pretty much a 1-to-1 ratio, nothing too strenuous there. We have been, of course, tracking this, way B and C here, okay, and then we are looking for more corrections. Now, here we actually have potentially a 5-wave structure just taking us down ever so slightly lower with an overextension towards the end. Again, very common here for Bitcoin at the moment, and this one is all valid, but we could basically be looking at something like this, where we have a 3, 3, 5, pattern. Now that fifth wave would potentially normally come down lower, but it's also possible that we actually just double bottom this one here at 32. 917 is also possible that we come down and retest these lower areas, but I would not expect to retrace more than 100% of our origin position here. So basically we could not go lower than 28,805 in order to keep this structure the same. Okay. So on a macro view, and we take a look at all of this, it actually looks pretty good. And if that is the case, then basically we would look for a 5-wave impulsive structure to take us up into new all-time highs. Okay, and that would basically make us with a 5, 3, 5 structure. And then look for some kind of retracement, however complicated that may look, which could not go any lower than $69,000, by the way. So we'd expect this to be a really significant surge going up. And then we'll look for some kind of retracement, and then we look for the final 5 waves to take us up higher afterwards, okay? Now, with an overextended wave like that, it would be, but it would put us, at some fantastic highs. And obviously it's wild speculation as to kind of what that looks like. However, it is something that we should consider. It could be multiple cycles in order to kind of play this one out. But, we are talking about Bitcoin moving up quite significantly within this structure. There will be these bearish phases. There's absolutely going to be. But I think ultimately this is something that we should be acknowledging, that long term, Bitcoin is actually on a pretty decent path to the upside before we can talk about bigger pullbacks to the downside. So I wanted to start off the video with that, just kind of get that idea out there, that where we are is actually a reasonable location. And we shouldn't be overly too concerned with these retracements. These are just fantastic opportunities as I see them. Now, obviously, what compounds this thinking is the shrinkage of supply on exchanges and what the whales are up to. So we are at multi-year lows for BTC on exchanges. This is well known at this stage. And this goes back way over here into August of 2018. So about 4 years, coming up to 4 years ago, this was the level of Bitcoin, right? And as more accumulation continues to occur, the lower and lower Bitcoin supply becomes on exchanges. This is going to have a huge impact on price, because for those who do not know, market cap is not a barrier to price discovery. Market cap is just your last sold price multiplied by your circulating supply. Okay, that's what gets you a market cap. Now, what actually drives up the money in the space? Well, that would actually be two things. We've got to have a supply Okay, so whether that is a series of number of coins that you've actually got and how much of that is available, and of course demand, right? How many people here are actually looking to accumulate Bitcoin, for example, right? So when the demand comes in and the supply has been decreasing, what you'll end up finding is it leads to price discovery. Okay, that's the only things that really matter. Market cap, liquidity, liquidity to a degree, but market cap absolutely not. What you need to see is money flowing into the space because of the demand that increase, and you need to see the supply come down. So when it comes back to Glassnode here, what are we actually seeing? Well, we're seeing the supply come down quite significantly. If we take a look at one of my favorite reports for Glassnode, the net position change, we just zoom in here on 2022. If it'll let me slide that, there we go. You can see we've had nothing but accumulation going on in 2022, right? A little bit of a blip in the middle there in the early stages, and specifically around the early January. But other than that, we've seen over 4 million BTC leave the exchanges in 2022. 4 million Bitcoin. Okay, now there's only 21 million Bitcoin that could ever be in existence, of which I would estimate a good 12 or so % is actually lost Bitcoin, and that dwindles that supply down significantly. Also, not all of it's been minted yet, so out of 4 million of the circulating supply of BTC has disappeared from the exchanges. That is a massive amount of accumulation that's been going on. Just yesterday alone, we saw another 67,000 BTC leave, or more left. 67,000 more left of the exchange yesterday than went on the exchanges. All inflows, outflows. What's the difference? Less than $67,000, 67,000 Bitcoin gone, right? So very, very significant amount of accumulation that's going on. But where's it going? We've spoken about this before, but basically we have an accumulation with whales of over 1,000 BTC here. You see slight fluctuations as they pulled price down ever so slightly here. This actually looks worse on the graph than it is, but essentially huge spikes in February, taking up the whales. The whales have been accumulating. They continue to accumulate at the expense of retail investors. And the same is being said for people who own more than 100 BTC. Okay, so again, they are riding this quite nicely, and they're basically accumulating whilst retail investors are panic selling. After all, right, we are in a bear market, and that's the narrative that is being spun, and that is what you are essentially as a retail investor kind of buying into. So let me just get rid of this if I can, of course. So I don't want all these drawings on the chart, but basically what I'm talking about here, guys, is a significant amount of accumulation going on at the expense of retail investors. Now, I know I've seen comments of people asking, how are the whales accumulating Bitcoin if the price is only going down? And simply, when you sell BTC, there's always going to be a buyer for that BTC. They're paying the price that you're willing to sell it at. Okay, so if you're willing to sell it less and less, right, and essentially if there's too much supply from retail investors flooding the exchanges, for example, or flooding the market, essentially what you end up with is basically the price of Bitcoin dropping down, and people are willing to sell the Bitcoin at lower and lower prices because they believe that you're going down to $20,000 or maybe even less than that, right? We're seeing some absolute crazy numbers. And as a result of that, you're basically selling your Bitcoin to the whales at those discounted rates, and they're just mopping it up. And the other way that they do this as well is through pockets of liquidity. Okay, so when retail investors foolishly use leverage, what they end up doing is actually creating pockets of liquidity. Okay, so let's hypothetically say you're doing a short position on BTC. And essentially what that's going to do is it's going to create a position somewhere in the market where you would get liquidated, right? So if the price was to go up, let's say you were to short Bitcoin at $40,000 and you'll get liquidated at, let's say, $45,000. When the price moves up to $45,000, your Bitcoin is available to be sold at $45,000, okay? And it is be sold to whoever can gravitate towards that pocket of liquidity. So the more long positions or the more short positions that open up, essentially what you're doing is creating these pockets of liquidity that the whales and institutions can move the price into, and then they can accumulate your Bitcoin without moving the needle for BTC significantly. So understand the tactics that are used here, guys. Understand how the market works, and where possible, do not use leverage. Do not put yourself in a position where you can get liquidated. Okay, own the asset. If you can't afford to own the asset, then it probably isn't for you, and you should probably avoid the space. And that's kind of my personal thoughts and opinions on it. Obviously, I'm not a financial advisor. I cannot give you financial advice. So kind of do your own research, come to your own conclusions. But guys, that's kind of this video. I kind of wanted to do the opposite of what I did yesterday. Yesterday we were looking at more the bearish scenarios, talking about $23,000 Bitcoin. And here I am talking about the structure of the overall market for BTC and where it could be going slightly longer term. If you found this useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, why not go ahead and subscribe, tap the bell, select all notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. With all that said, done and out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.